pattern, as is indicated over here. Okay, here you can see that pattern is not forming in our nest of lows. Okay, there is the nest of lows. It's a fairly normal funnel-shaped nest of lows. Okay, so so that's the first thing. It's purely a personal thing that I picked up from experience. It's not always true by any means, but I've often taken it as a sign that I need to take a look at things more carefully. I see a comment from John D. The bounce from 9th of May in your analysis did not cross the 20-day FLD and did not come close to the 40-day FLD. Does this matter? Yes, John. It does matter, of course, and you are absolutely right. And if we plot the FLD on that analysis, let's plot it on this analysis here. Let's plot the 40-day and the 20-day. There we go. All right. So, and I need to see some more. I need to see some more cycles here. So let's just change the number of cycles that I'm plotting. Okay, all right. So as John D points out, the bounce out of the 9th of May did not, in fact, cross the 20-day FLD. You can see it there. I don't need to draw all over it. It didn't cross above the 20-day FLD, which means that in theory, of course, troughs need to form and are only confirmed after they cross above the FLD, which means that, in fact, this placement here on the 21st of May is theoretically the correct placement of that trough. So, okay, thanks, John. I see John's on his way out. I need to be wrapping up as well. Thanks very much, John. See you next time. So John D, your argument is absolutely correct. Okay, price didn't cross that FLD, therefore it didn't provide us with confirmation that a trough had been formed, and therefore surely we shouldn't put the trough there. Yes, you're absolutely correct. However, I've noticed that, of course, often when markets are approaching major troughs, things tend to get a little bit overexcited, okay? Both to the downside and sometimes also to the upside. You know, there's sudden lurches upwards and sudden lurches downwards. When the market gets into a downwards trend, it just keeps going. And what sometimes happens is that the market breaks the rules. So it doesn't cross over the FLD. So you are absolutely correct. However, I would caution you against sort of absolutely following the rules. Yes, according to this, strictly according to the rules, that should not possibly be a 20-day cycle trough. But when markets are approaching major troughs, and this is a 9-month trough, okay, it's a 40-week cycle trough, so it's a fairly major trough. When markets are approaching major troughs, they tend to break the rules. And so I would caution you to look at other alternatives, even though they do break some of the rules. And just keep an eye on them. Okay, that's my recommendation to you. I said I would mention one other reason why I believe that the 40-week cycle trough might be forming now as opposed to later. And so let me show you that. And this is something that I did in Trader Chat a few weeks ago. I think it was either 4 weeks or 6 weeks ago. This is a rule of thumb that I like to use, and I used it 6 weeks ago, and I said we need to look out for the first week of June. And this is what I did, and I will do it again for you. It's a rule of thumb. Again, it's not something that Hurst published. It's something I've found useful for my trading to keep me on my toes, and I'm going to show it to you. When you are looking for a future trough in a cycle, I find it very useful to take a look at the longer cycle FLD. Okay, the longer cycle FLD. and draw a line through the longer cycle FLD. And if you find a pattern like this, there we go, I've drawn it. If you find a pattern that looks like a W, there's the W. As you know, I'm very keen on shapes and cycles. If you find a pattern that looks like a W in your longer cycle FLD, then that peak in the middle of the FLD, I have found from experience, and look at your charts, see if this works for you, I have found from experience that very, very often that middle point forms the trough of the shorter cycle. Okay? It's purely a rule of thumb. This is not pure Hurst coming at you. This is a rule of thumb that I've found very useful. So let's draw that W again over that 18-month FLD. Okay, comes down to a trough, goes up again, comes down again, goes up again. Okay, there's our W. Where is the center point of that W? And I did this a few weeks ago, very quickly in passing in Trader Chat. That middle peak of the W is in the first week of June. Okay, now that's not evidence. I'm not presenting you with hard evidence. But I'm saying that as a rule of thumb, I found that very often that is the case. And several weeks ago, I told you, or I mentioned, that we should look out in the first week of June for the potential formation of the 40-week cycle trough. Okay, so I think it is possible that the 40-week cycle trough is in the process of being formed. All right? So what do we need to do? Well, first of all, I'm very keen to trade out of this 40-week cycle. 40-week cycle is a 9-month cycle. It's a pretty good cycle, and we've calculated underlying trend and done all that kind of thing before. And I'm not going to do that now, but I am keen to take a trade coming out of this cycle trough. And where would I take the trade? I would take the trade on an FLD. And certainly the FLD that I would start with is the FLD 1 degree shorter than the cycle that I'm about to trade, which in this case is the 20-day FLD. And I would have a look at that, as I am doing right now. If I am going to take a trade in a long direction, I need to look at the FLD based on the high price. There it is. There's the FLD based on the high price. Okay. Now, when price crosses that FLD, I would be interested in entering a long trade. Okay, and so let me just draw over that FLD because you probably can't see it. And there we go. There is the 20-day FLD based on the high price. When price crosses that FLD, I would be interested in taking a trade. Okay, and I would enter the trade as price crossed that FLD. Now, as I have mentioned, there are potentially two things happening. The one thing that is happening is that a 40-week cycle trough occurred yesterday or is occurring right now. It might occur today maybe or tomorrow, okay? But it's occurring right about now, all right? Now, if I set a stop entry order up at this level, okay, then what happens if price today drops lower and forms another lower trough? Have I made a mistake? No. Because remember, when you're trading using Hurst cyclic principles, you walk into a trade. We're walking into this trade. Okay? I'm not going to call up my broker and buy right now. I'm going to create a stop entry order right up at this level. And I'll show you in a moment what that level is. I'm going to create a stop entry order right up at that level. Okay? And if price falls lower and therefore hasn't formed the trough yet, no problem. I haven't entered my trade yet. Okay, so I'm not making a trading decision on the basis that this cycle trough definitely formed yesterday. Okay, it could form over the next week or 2 weeks. All right. Now, what happens if the alternative analysis that we've discussed, and I presented 3 analyses, and I explained to you that there are only 2 possible things that are happening. The one thing that's happening is 40-week cycle trough is bouncing now. The other possibility is, as the Johns have pointed out in the chat window, is that the trough is probably only of 20-day cycle strength. Okay. Now, if that cycle is of only 20-day cycle strength, then will price cross the 20-day FLD? Yes, It probably will. Okay, which means that I might get stopped into this trade at the 20-day FLD as price crosses that 20-day FLD level. Okay, now, if that happens, is that a disaster? Well, no, we need to be very, very careful if that happens, that in fact the alternate analysis is not playing out. Because if the alternate analysis is playing out, then this trough is only of 20-day cycle magnitude. Price will come and cross that 20-day FLD, okay, but the underlying trend of this 20-day cycle is likely to be fairly bearish, so price will very quickly turn down again and we'll be losing money before we know it. Okay, so what do we do? Well, fully aware of the possibilities of what is actually happening in the market at the moment, I know that one or two things could be happening, but I can make completely confident trading decisions on the basis of that. I'm going to trade when price crosses the 20-day FLD. Okay? As price moves towards that 20-day FLD, if I see any sign of weakness in the market, if it looks like it's just not really getting it right, it's not bouncing out of a 40-week cycle trough, I'm going to already change my mind and I'm going to cancel my order because there is weakness in the market. And there shouldn't be weakness in the market climbing out of a 40-week cycle trough. Okay? So I will probably cancel my stop order before we even get into the market. If I don't cancel my stop order and we do get stopped into the market, then I will be watching that market very, very carefully, because it needs to continue to behave as if though it is a as if though it is a cycle, as if though it is a price bouncing out of a 40-week cycle trough. And what is the first thing that it needs to do? Well, let me draw over that FLD again. There's that FLD. When price crosses this FLD, I will have entered the market. Okay. Now, if at the end of the day or the day afterwards, I look back and it looks like a good, clean price cross, I'm going to feel confident that, in fact, I'm still the cyclic reasoning upon which I base my trade, which is that a 40-week cycle had formed, is still correct. If, however, it proves to be a not very good cross, and then price sticks to and follows the FLD, okay, then I am going to tighten my stops, because I'm going to say it looks as if though I've got into this trade prematurely. I will tighten my stops, and I might even simply exit the market, simply on the basis of the fact that the market is not behaving the way it should be, given the cyclic reasoning that caused me to enter the trade. There we go. That wraps up today's Trader Chat. Thank you very much for being with me today. Thank you for your interest in Sentient Trader. And I look forward to seeing you at tomorrow's Oz Trader Chat, if you can make it, and at next week's